warm welcome to this week's video update by Zenergy. My name is Scott and it's the 11th of May 2022. Today we'll be going through the weekly movements in the markets and we'll be looking at any recent trends we've been seeing and any drivers in the markets we can see going forward. So if we take a look at gas prices to begin with, we can see week to week there hasn't been a great deal of change. So a typical 1 year contract is down ever so slightly, 1.4%. And we can see year 2 and 3 gaining ever so slightly in value week to week. So that backwardation in the contracts we are seeing is contracting still, but at a much more reduced rate now. And really, if you look at a more 50-foot view of the market, we're seeing it kind of plateau, if not ever so slightly trend downwards. So very settled really, but we do have some day-to-day volatility still in the markets. Power even more so. So we've seen, if you look at that graph since April, as being very flat in terms of your 1, 2 and 3 year kind of contracts. Although that backwardation again is contracting ever so slightly, and again near-term prices have edged ever so slightly downwards, and longer dated contracts are seeing valuations propped up slightly. So what caused the price movements over last week? Even though it was quite settled, there were kind of a few key events to occur. So firstly, we had an update on Europe's gas storage levels. So the latest update is that's at 37% as a collective average across the EU, which is higher than this time last year, which was around 30%, but is trading the 5-year average. So it does really depend how you view this, if this is positive or negative, a bearish or bullish driver in the market. But the market did look at this ever so slightly positively, and we've seen near and slightly longer dated contracts, monthly contracts into perhaps autumn, trade downwards ever so slightly on the back of that news. Next, and perhaps the biggest news last week, was the EU's proposed ban on Russian oil. So we've had a number of sanctions throughout this conflict since it started in Ukraine, but this one poses to be the most significant yet in terms of our industry, the energy industry. So the reason being is they, seek economic damage on Russia to stop funding of the war, so to speak. So the embargo has to be voted through by all members of the state. Now, there are speculations that Hungary, who are very dependent on Russian oil, could vote against this. And to kind of caveat this, the EU have given certain countries that are more dependent on Russian oil concessions, giving them a year to kind of make that transition. So countries like Slovakia and Hungary have been included in that. There's still a risk that Hungary could vote against this, and then what happens from that is to be determined really. But we are expecting further talks this week, which I'll come on to on that. As a result of this, we have seen oil futures trade higher. So Brent has traded higher as a result, 3 to 4% on the back of this news, but it has been weighed down by other factors as well. Lastly, last week we saw temperatures rise, so they've been at consistently higher than average levels for this time of year. This has helped to reduce heating demand, and the key here is that temperatures haven't been hot enough to require the cooling demand either. So it's been that almost Goldilocks level of no heating required, no cooling systems required either. So that has helped to keep demand down. So a happy medium there. We look at this week's event, and it is Wednesday now, so some of these have already occurred. So the most recent is, as of this morning, we had news that Ukraine has rediverted around 20 to 30% of its gas flowing through the country. This was declared through force majeure due to occupying forces disrupting operations. So we're having unconfirmed reports that there's been unauthorized withdrawals and rediverting of gas from Russian forces, and that has led to Ukraine acting on that. Now, with the fallout from this, it's yet to be clarified how this will impact flows into Europe, but there is the potential for disruption here, and further news on this is probably expected in the coming days. Next is we are expecting more rounds of discussions on the ban of Russian oil. So we're expecting announcements to come out from that this week on that. Next is that we are expecting data on economic downturn. So countries such as China and UK have already given out economic forecasts. Key being here is China's exports have declined. So that is obviously weighing down certain commodities. And then we have, the constant news of inflation rates and stuff like that, and the general fear that an economic downturn is on the horizon, and that does affect commodity prices. So markets are looking at and waiting for more economic data as and when it comes from other nations. This week we are expecting wind generation to pick up. So it is expected to be an upward trend all week before then reversing. That should help push down day ahead prices, certainly at least. So that will come into the mix and help supply picture. So there's some of the events to look out for this week. If you do want further, more up-to-date information, we always publish on our website every day, which is available on the marketwatch.zenergy.co.uk website. And we have our live chat team still to chat to between 10 and 12, Monday to Friday. So thank you for watching. And as always, every week we'll be publishing the next video update. Thank you.